Good morning. Welcome to the program. Please take it off from there. I'm sure you can hear me.
Yeah. Okay. So, I mean, it was quite an unexpected, development we saw in last week. First, on Wednesday, the CBN came out to say, corporates, local corporates could not participate, in the OMO market, both the primary market and the secondary market. Later on Thursday, they issued a clarification that among the local corporates are non-bank financial institutions, which includes insurance companies, pension companies, and so forth, and so on, rather. So the reaction has basically, the mood has rather been silent. On Wednesday, market players were expecting, a bit of clarity on what the CBN was really trying to do. And on Thursday, we had, a bit more clarity, but trading was actually calm. So this week, we believe over the weekend, non-bank financials as well as individuals will have digested the news, and we should see a bit of the implications of the circular play out in the market this week. For us, we think, the prevention of non-bank financials institutions as well as individuals from accessing this market, it's not good for them because, a lot of investors, there's really not that much opportunity to put liquidity into in the market currently. Equities is not doing very, very well. In terms of government bonds and T-bills, the supply of this have actually been limited because of the recent federal government strategy to issue more external debt rather than local debt. So the reaction, we believe, will be that you tend to see more local corporates going into T-bills, buying more T-bills, buying more bonds, and the implication will be, a broad-based reduction in yields across the board. So for non-bank financial institutions and for individuals with portfolios, it might not be a good look for their books.
Yes, Adedayo, what's the central bank trying to achieve here? If you look at the open market operations, basically, the central bank says this is a pure monetary policy tool for liquidity management and should stay that way.
Yeah, absolutely. That is the way it is designed to be. But since 2016, we've seen, a bit unconventional methods to what the CBN is trying to do. So naturally, it's, a liquidity management tool, which should be to actually, in terms of Naira liquidity, what we've seen is usually, it's restricted to more of banks mainly rather than individuals. But what we've seen over the past 3 years is that we've seen a very high participation from individuals. We've seen very high participation from foreign investors, which, the strategy of the CBN is actually to use OMO securities to attract foreign investment, build up reserves, and to, preserve the stability of the Naira. So basically, the strategy is still in terms of, attracting foreign portfolio flows into the country. I think that is intact. What the CBN is trying to do now currently is because, they've had a lot of issuances over the past few years, and that is actually affecting the books of the CBN. So in terms of the interest expense, it is costing the bank a lot to actually keep issuing these securities and having to roll over the securities. So what we're seeing now is that by reducing the participation from local corporates, you have more of them going into T-bills, more of them going into bonds. So that should drive yields lower, for governments and for corporates and other issuers in that segment. But they'll be able to retain foreign portfolio flows from foreign investors.
Adedayo Bakare from Afrinvest. Thank you so much, an investment analyst. Have a great week ahead.